my friends, once again, we find ourselves witnessing a game of global economic chicken, and the stakes could not be higher. An advisor close to China has declared that China can walk away without a deal. That statement, while brief, sends shockwaves across boardrooms, trading floors, and political offices around the world. Because what it really means is this: the world's second largest economy may no longer be willing to play by the rules the United States wrote. And that, my friends, represents a seismic shift in the balance of global power, not just economically, but ideologically. When we talk about China's growing economic independence, we are not simply referring to numbers on a balance sheet or fluctuations in export statistics. We are witnessing the unfolding of a fundamental shift in global power dynamics, one that is redefining what economic sovereignty looks like in the 21st century. For decades, China was portrayed as the factory of the world, dependent on Western demand, Western capital, and Western technology. But the reality has changed dramatically. Today, China stands at a point where it no longer needs to cling to the global trade system as designed by Washington. It has quietly, deliberately, and strategically built an economic architecture that allows it to stand on its own, a move that sends shockwaves through every major economy on the planet. The statement that China can walk away without a deal isn't political bravado, it's economic truth spoken with quiet confidence. Because beneath that statement lies decades of calculated maneuvering. China anticipated this moment long ago, a time when trade tensions, sanctions, and economic rivalries would no longer be exceptions but the norm. So it did what few nations have managed to do in modern capitalism. It built domestic industries capable of supplying its own market, invested in high-end manufacturing to reduce dependence on Western technology, and expanded its Belt and Road Initiative to secure new trade corridors across Asia, Africa, and Europe. Every move, every policy was a step toward one goal: insulation from Western leverage. That's not a reaction to the trade war. It's the long-term outcome of a vision spanning decades. And here's where the hook lies. What happens when the world's largest consumer base and manufacturing hub decides it doesn't need to play by another country's rules? The answer is simple. The balance of global capitalism tilts. For years, the United States wielded its economic dominance through control of international institutions like the IMF and World Bank, through the power of the dollar, and through its capacity to dictate trade conditions. But now that control is eroding. China's ability to trade in its own currency, the yuan, and create parallel payment systems is more than financial diversification. It's a challenge to U.S. hegemony. It's an open declaration that the monopoly of one nation's economic power over the global system is nearing its end. This independence didn't happen overnight. It came from the recognition that dependency is vulnerability. Beijing learned that when your exports depend on another country's consumer demand, you are never truly free. So China turned inward. It fueled domestic consumption, raised wages, and fostered a growing middle class to create internal demand strong enough to sustain its industries. It began transitioning from an export-driven economy to a consumption-led one. This shift was not easy. It involved restructuring entire industries, confronting inefficiencies, and dealing with short-term economic pain, but long-term stability was the prize. And now, as global tensions rise, that patience is paying off. What's truly fascinating and rarely discussed is how this strategy reflects a distinctly different understanding of capitalism. While the US model prioritizes short-term corporate profit, China's approach blends state planning with market activity, ensuring that national interests come before quarterly earnings. Whether one agrees with that approach or not, it undeniably works to create resilience, and resilience in a world of trade wars and financial volatility is power. The ability to withstand external shocks is what gives China the leverage to walk away. It's not about arrogance. It's about preparation meeting opportunity. Let's not forget the global implications of this shift. Multinational corporations that once treated China as a low-cost production site now see it as a competitor, innovator, and even a market rival. Supply chains that were once unidirectional from China to the world are now multinodal, spreading across Asia, but still orbiting around Beijing's gravitational pull. In technology, in green energy, in electric vehicles, and in artificial intelligence, China no longer follows, it leads. This is not just economic evolution, it's strategic independence in action. The hook that should grab every analyst's attention is this: when a nation of 1.4 billion people, armed with technological capability and industrial depth, declares that it doesn't need a deal with the world's largest economy, we are not watching a trade negotiation, we are watching history pivot. The very rules that governed globalization for the past 70 years are being rewritten. The dollar's dominance, Western trade frameworks, and the ideology of free market dependence are all being challenged by a state that has found its own formula for success. So when an advisor says China can walk away, it's not a threat, it's a statement of arrival. It signals the end of an era in which economic power was monopolized by one pole. It's a quiet but firm declaration that globalization is no longer Western by default. The world is now multipolar, and China has positioned itself not as a follower in that system, but as an architect of its next chapter. The balance has shifted, and whether the West likes it or not, China is no longer negotiating from weakness, it's negotiating from choice, and that, in the language of global economics, is the ultimate definition of independence. The trade war between the United States and China is often described in headlines as a battle over tariffs, manufacturing, and market access, but beneath that surface lies a much deeper and far more revealing truth. It is a reflection of systemic weaknesses inside both economies. What we are seeing is not merely two nations sparring for dominance, but two economic models exposing their structural vulnerabilities under the pressure of global change. When advisors and officials frame this as a contest of strength, they obscure the reality that both sides are fighting to conceal internal economic fragilities that have been building for decades. The trade war, in essence, is not a show of confidence. It's a cry for control in a system slipping away from them. Here's the hook that should make everyone pay attention. The trade war didn't cause these weaknesses, it exposed them. It pulled the curtain back on an uncomfortable truth that the American model of unrestrained capitalism and the Chinese model of state-directed capitalism are both showing cracks, not because they are too different, but because they are too similar in one key way. Both prioritize profit and growth over sustainability and equality. The US pursued deregulation and financialization, funneling wealth upward while eroding its industrial base. China, in contrast, pursued rapid expansion and export dependency, accumulating debt and creating inefficiencies within its state-owned enterprises. Now both face economic slowdowns, rising inequality, and restless working populations. The trade war didn't invent these tensions, it simply made them impossible to ignore. When the United States first imposed tariffs on Chinese goods, the intent was to correct what it perceived as unfair trade. But what Washington didn't acknowledge was that the outsourcing of American jobs to China wasn't China's crime. It was the logical consequence of U.S. corporate greed. American companies moved production overseas to cut labor costs and maximize shareholder returns. For decades, they enjoyed record profits while hollowing out domestic industry. The trade war, therefore, is not about punishing China, it's about deflecting attention from a broken domestic economic model. By blaming China, policymakers mask the uncomfortable truth that America's working class was sacrificed long before the first tariff was announced. At the same time, China's economic machine, once seen as unstoppable, now faces its own contradictions. After years of double-digit growth, the Chinese economy is slowing. Debt levels among local governments and state-owned enterprises are rising. Property markets are unstable. For a model that relies heavily on investment and export surpluses, even a small disruption in global demand sends ripples through its entire system. Beijing's challenge is that it must now maintain growth while managing inequality, environmental strain, and a shifting demographic balance. The trade war intensifies these internal pressures by restricting exports and limiting technology access, forcing China to accelerate its transition toward a consumption-driven, innovation-led economy, a transformation easier said than done. What's truly striking, and here's where the hook deepens, is how both nations' economic elites are responding. Instead of addressing root causes, they've turned the trade conflict into a political spectacle, a stage where nationalism replaces accountability. American leaders tell citizens that tariffs will bring jobs back, while Chinese officials speak of self-reliance and national rejuvenation. Both narratives are powerful but deceptive. They create the illusion of control while leaving structural problems unresolved. The real beneficiaries of this standoff are not the workers, but the corporations and financial elites who continue to profit regardless of the outcome. If we analyze the data closely, we see a paradox at play. Tariffs meant to protect U.S. manufacturing have actually increased production costs, feeding inflation and pushing consumer prices higher. American farmers and small manufacturers have suffered from reduced export demand. Meanwhile, China, despite enduring the initial pain of tariffs, adapted more effectively by finding new markets and promoting domestic consumption. This adaptability reveals not only China's resilience, but also America's overexposure to financial speculation rather than real industrial strength. The U.S. economy, addicted to debt and dependent on asset bubbles, is less flexible than it appears. The trade war merely accelerated an inevitable reckoning. The global ripple effect is undeniable. Other nations caught in the crossfire are being forced to choose sides or diversify their alliances. The international supply chain, once tightly integrated under the logic of globalization, is fragmenting into regional blocs. This fragmentation doesn't just weaken trade efficiency, it weakens the ideological foundation of globalization itself. For decades, the world was told that free trade and open markets would guarantee prosperity for all. Yet, as this trade war shows, those promises were built on fragile assumptions that profit would trickle down, that inequality would self-correct, and that the market could regulate itself. None of those assumptions hold true anymore. Both systems, American and Chinese, are grappling with the same question: how do you sustain growth in an economy that's already overextended? The U.S. relies on financial instruments and credit expansion, while China leans on state investment and export led production. In both cases, the engine of capitalism is running too hot, consuming more resources, creating more debt, and delivering less stability. The trade war becomes a convenient scapegoat for the consequences of these long term contradictions. When economies can no longer expand smoothly, political leaders turn to external enemies to explain the turbulence. That's not strategy, it's historical repetition. The deeper story here is that this trade war is not about who wins, but about who breaks first. It's a test of endurance between two struggling giants whose economies are far more interdependent than their rhetoric admits. The US needs China's manufacturing, and China needs America's consumer market, but both are trapped in a system that demands competition over cooperation. The irony is almost poetic. Capitalism's drive for profit created a global economy so interconnected that now even its most powerful players cannot disentangle without harming themselves. So when we hear leaders frame this as a battle for supremacy, we must look past the slogans. The trade war is not the disease, it's the symptom. It reveals that both the US and China are confronting the same historical turning point, an era where the logic of endless growth is colliding with its own limitations. And no matter which side claims victory, the struggle is no longer about trade, it's about the sustainability of the system itself. Behind every headline about tariffs, summits, and trade negotiations lies a deeper and often ignored reality. This conflict is not only a contest between two nations, but a struggle between economic classes that transcends borders. The trade war between the United States and China has been sold to the public as a patriotic defense of national interest, but beneath that rhetoric, it is a clash over who bears the costs and who reaps the rewards of modern capitalism. The powerful on both sides, corporate executives, political elites, and financial institutions, maneuver to protect their profits, while workers, small business owners, and consumers are left absorbing the economic shocks. It's not a fight of country versus country, it's capital versus labor dressed in the costume of nationalism. The hook here is simple yet striking. Every trade war, like every economic crisis, exposes not just the rivalry of nations, but the inequality of systems. When Washington and Beijing exchange threats over tariffs, the true battlefield is the grocery store, the factory floor, and the paycheck of the working class. In the United States, the tariffs that were supposed to punish China have instead raised prices on everyday goods. American families pay more for electronics, clothing, and food, all while wages remain stagnant. The supposed protection of American jobs has not materialized because corporations simply pass the costs on to consumers or move production to other low-wage countries like Vietnam and Mexico. Meanwhile, Wall Street remains unaffected, continuing to generate record profits from speculation and market volatility created by the very uncertainty of this trade conflict. In China, the situation is no different. While the government projects resilience and confidence, workers in manufacturing hubs face factory slowdowns, layoffs, and wage cuts. Small exporters struggle to maintain orders as global demand fluctuates. And yet, China's billionaire class continues to expand, buffered by state support and access to capital. The system ensures that economic pain is distributed downward. The message is clear: Whether it's American capitalism or Chinese state capitalism, the workers always pay the price of geopolitical ambition. The trade war, therefore, is less about national pride and more about preserving elite interests behind a curtain of patriotic slogans. Let's pull back and examine the psychology of this moment. Leaders on both sides invoke fear: fear of losing dominance, fear of foreign manipulation, fear of decline, because fear keeps people divided. The American worker is told that China stole their jobs, while the Chinese worker is told that America seeks to contain their rise. Both narratives serve the same purpose: to redirect public anger away from domestic inequality and toward an external enemy. This manipulation of public sentiment is one of capitalism's oldest defense mechanisms. When the system falters, blame the outsider. It's a diversion tactic that has worked for centuries, and it's working again now. But here's the hook that cuts deeper. The global working class, though divided by borders and languages, is united by a shared experience of exploitation. Whether in Detroit or Shenzhen, the story is the same: longer hours, higher costs, less security, and shrinking power to influence economic decisions that shape their lives. The trade war, in that sense, is a mirror reflecting how capitalism has evolved beyond national boundaries while keeping its inequalities firmly intact. Corporations operate globally, profits flow globally, but the pain remains local. This is not a coincidence, it is design. There's a bitter irony in watching both governments claim to defend their people while enacting policies that deepen inequality at home. In the US, corporate tax cuts and deregulation accompany the trade rhetoric, enriching the same firms that offshored jobs in the first place. In China, the state pumps credit into industries dominated by powerful elites, while ordinary citizens face rising costs of living and limited access to upward mobility. The rich insulate themselves from the consequences of economic conflict, while the poor are told to tighten their belts in the name of patriotism. That is not national unity, that is class hierarchy masked as collective struggle. The broader global impact cannot be ignored either. Developing nations that once benefited from the steady flow of trade are now collateral damage in a war they didn't start. Supply chains fracture, raw material prices fluctuate, and investment dries up, all while multinational corporations hedge their bets to protect profits. This isn't simply a US-China confrontation, it's a reordering of global capitalism where the elite consolidate control amid crisis. The truth, uncomfortable as it may be, is that trade wars serve as smoke screens. They give political leaders the illusion of strength and corporations the opportunity to profit from chaos, while ordinary people lose economic security and faith in the system itself. The fight between Washington and Beijing is, at its core, a struggle to preserve a global order that works beautifully for the few and disastrously for the many. The hook that we must not miss is this: every tariff, every sanction, every speech about national interest hides the same question: who benefits? And time and again, the answer is not the people whose labor keeps the system alive, but those who have mastered the art of profiting from its instability. The real war isn't fought in trade offices or diplomatic halls. It's fought in the daily lives of billions who carry the burden of decisions made by the powerful.